Yes, Ayo, thank you, Chimeze. And I'm truly interested in if we move on the conversation a little bit to the equity side of things. Where do you see the equities markets go from here with the earnings that we have? And these earnings are beginning to show that the economy is not as strong as we all thought. You said the fundamentals are strong, yes, but we're beginning to see a bit of a weakening in some of these earnings, even with the big banks like Zenith Bank 2 days ago turning its numbers, and I'm sure you can relate to those numbers.
Yes, thanks for that. We've seen that for looking at based on sector basis, especially you look at the consumer goods, for most common denominator that have been affecting their performance, there has been smuggling. And when you come also to the banking space, you also discover that in terms of yield on investment, for Zenith Bank, we know they are very heavy on government securities. So it's not a surprise to see that moderation in their top line, that's their gross earnings, as a result of the reduction in interest income. So, but in terms of our outlook for the market, we expect market to still remain soft. The earnings season is wrapping up. Well, we still expect, I think, GT Bank, Access, and UBA to release their audited account. But with what we've also seen with Zenith, the investors may not be too excited in terms of positioning ahead. But one interesting thing about the market is that the sell-off that we've been seeing also provide opportunity for new investors to come in at a very low level and to position, at least if you have like a year horizon, will also be able to, you'll be able to recover or make significant or impressive gains when we are looking at the market in the next 1 year.
So how much of debt capital raise should investors anticipate this season of a tense political environment?
Okay. In terms of debt capital, we've been seeing short-term instrument, commercial paper. I think Sterling Bank will be announcing the result of its just concluded commercial paper offer today. We expect that for most of the corporates to take advantage of this low yield environment, to raise commercial paper as well as corporate bonds to restructure some of their very expensive loans. We know in terms of how high lending can be within the financial sector, but with the current rate comparing to last year as high as 20%, at current levels, we feel that there's investors, the issuer or corporates can take advantage of this, and there's appetite from investors that they'll be willing to take up whatever has been issued, depending on the rating and the past antecedents of the company.
All right, I'm being told that Bosun has a question for you. Bosun.
Yeah, just a quick one. Yes, I was just talking about the corridor of the commercial papers, Ayo, with what the MPC last meeting talked about, opening the back door via the CRR for the regulator to buy back commercial papers for big ticket companies like Dangote Cement. So should investors at the market be worried that with the political environment, would there be the appetite for banks and the companies to float into the market at this very political season when the central bank will also be very aggressive in terms of treasury bills mop-up?
Yes. What most investors will be concerned about is how will the company repay. So in terms of the rating of the company, looking at the performance of this company will have a major role to play before investors will subscribe to the commercial paper offer. And looking at the from the perspective of the CBN in terms of also buying from the issuer, we see that like in quote like a quantitative easing, but we've not seen enough in terms of the policy on how that will be done, or how in terms of how it will be structured. But what would expect that would see is that for companies that have very good rating, and in terms of looking at in terms of their performance in the past 2-3 years, and in terms of the volume compared to the amount of offer compared to the size of the company that they issue, we feel that for most companies that will come out around this time, that for the offers will be very successful. Appetite is very, very strong because some investors are also divesting from equities and they are looking for investment with higher interest rates. Treasury bills we know currently around 11 to 12% levels. And investors, based on the yield for Sterling Bank that issued this week, yield was around 13.9%, which that's like about 2% premium. So investors will be seeking to take position in that. So a Sterling Bank issuing a size, I think maybe about 5 or 10 billion, can't recall the exact numbers now, compared to current level of assets. So you know that the risk is also minimized. Upon maturity, either the bank decides to roll over or either decides to pay investors. I don't think that will be a problem. But the main thing is the rating of the company as well as the past performances of that company.
All right, just a quick one, Ayodeji, before I let you go. Of course, today they are launching the new Securities Exchange Association. What's your outlook on that?
Yes, it's also interesting that most of the exchanges are coming together in terms of collaboration. It will help in terms of, it will reduce overlap. We've seen competition among some of those exchanges in terms of products. And if they are able to synergize, they were able to come up with a more broader policy for the capital market, provide confidence, and also come up with more innovative products that will help deepen our capital market.
All right, thank you very much for your time, Ayodeji. And of course, thank you, my colleague out there, Bosun, for joining in this conversation. We'll take a break now, and when we come back, we will focus on the macroeconomic development. To stay with us.